Is now starting. All attendees are in listen-only mode.
Hi, and good day to everyone around the world. Thank you for joining this live ACSS web seminar broadcast. In the next 75 minutes, Tracy and I will discuss the top 10 red flags on potential Russian sanctions evasion attempts. Next slide, please. My name is Alexander Witt, and I'm a sanctions and export controls consultant at ACSS. I'm usually the moderator, and today I'm actually also a speaker. I hear an echo in the background. I don't know where it comes from, but okay, maybe it's gone. I'll take you through a few housekeeping slides today before we begin with the webinar. So let's go to the next slide. First, we will just take a moment to check your sound test, to do a sound test. If you cannot hear us, please adjust your speakers in the first instance. And if you can still not hear us, please either use the instructions you see on the screen or contact us at helpdesk@sanctionsassociation.org. Next slide, please. Just as a reminder that for your convenience, this and all our webinars can be joined from a variety of devices, including your computer, your smartphone, or tablet. This can be done by downloading the GoToTraining app from Citrix and typing in the GoToWebinar ID number, which can be found in your confirmation email and is also displayed at the bottom of the control panel. Next slide, please. Your certificate of attendance for this webinar will be sent to you automatically after the webinar to the email with which you registered, so there's no need to request it. However, if you do not receive your certificate for any reason, please contact us at helpdesk@sanctionsassociation.org. Next slide, please. Before we start with the webinar, let's make sure you're familiar with the webinar control panel. You should see a control panel on the right side of the screen. If you don't see it, it is minimized. You can click the arrow button to bring it up. Minimize this panel by clicking the same button. The participant's guide, which includes speaker bios and a PDF of today's presentation, can be downloaded from the pod on the control panel called Handouts. We encourage you to participate in the discussion of the webinar through using the question pod near the bottom of the control panel. We will also ask you some polling questions during the webinar, so stay tuned. Next slide, please. If you don't already know ACSS, we are the Association of Certified Sanctions Specialists. ACSS is a professional membership body for sanctions professionals worldwide and is the only organization that creates a home for sanctions compliance. Next slide, please. An ACSS membership comes with many benefits, including our new Russia Sanctions Hub with the latest information on sanctions against Russia, available for download, our interactive sanctions map with all sanctions targets by the US, the EU, UK, and Canada, our sanctions guidance library with the latest sanctions guidance documents by regulators, ACSS task forces, sanctions training, and monthly Sanctions Connect calls. Also, all our webinars are available to members on demand, so make sure you visit the website to learn more. Next slide, please. Among other things, ACSS offers certification as a sanctions specialist, or CSS. I have actually completed my certification 2 months ago, so now I'm officially a certified sanctions specialist. This is obtained through a rigorous CSS exam, which is meant to extensively test your skills in the areas of sanctions compliance, implementation, and enforcement. If you pass the exam, you also become a CSS, or Certified Sanctions Specialist. So please visit our website to sign up for the next CSS classes. Next slide, please. One of our latest projects is the Sanctions Compliance Toolkit, which helps small and medium-sized organizations in creating a sanctions compliance program with one of our sanctions and export control consultants. If you also need to create the sanctions compliance program, please visit our website to learn more about this project. Next slide, please. Registrations are now open for our fourth annual US Sanctions and Export Control Conference. It is our flagship event for this year, which will be held in person in Miami on October 27th and 28th. The Russian sanctions will be discussed at length, including evasion tactics, licensing, the role of crypto and payment companies, BAS and OFAC enforcement actions, and many more topics. We have speakers from government agencies, including OFAC, BAS, the Department of State, and private sector sanctions officers from Deutsche Bank, AXA, Caterpillar, Binance, Royal Bank of Canada, and many more. So please visit our website and register now, and hopefully see you in Miami soon. Next slide, please. And next slide, please. Thank you. Before we begin, please allow me to introduce our first speaker, Tracy Manning, to you. Tracy is the Director of Financial Crime Compliance at LexisNexis Risk Solutions, based in Atlanta. Tracy is a digital identity and financial crime expert with over 25 years of experience driving data strategy, innovation, and growth efforts within companies like AT&T, Cox, Twitter, Cincinnati Bell, Ground Truth, and K2View. She now leads strategy developments and product innovation, planning for the North American financial crimes compliance market at LexisNexis Risk Solutions. Welcome, Tracy, and thank you for joining me today. And my name is Alexander Witt. I'm a sanctions and export controls consultant at ACSS. And prior to joining ACSS, I was an export compliance officer at Fujifilm Europe. Next slide, please. Let's briefly go through the agenda for today's webinar. We just did the introduction, and we will begin this presentation with the latest alerts that have been published by the US and the UK on red flags concerning Russia's sanctions evasion attempts. We will discuss the FinCEN alert. We will look deeper into virtual currency and guidance for virtual currency companies. Then we will move to the NCA and OFSI alert from the UK and end this presentation with some lessons to take away. Next slide, please. Let's begin this webinar with a poll question for the audience. The question is, does your organization have a list of red flags for sanctions evasion activity? Yes, no, or not sure? Let's launch the poll and wait for your results. All right, let's close the poll and see how you all answered. 64% said yes. So you have red flags for sanctions evasion activity. That's great, which means you maybe have a list somewhere printed out on your desk or on your computer, and you know what we are talking about today. Let's move on to the next slide. A major reason for today's webinar is the publications made recently by US and UK authorities urging financial institutions to be more vigilant about Russia's sanctions evasion attempts and providing red flag indicators for such activities, and some reporting guidance of what you have to do if you actually find a suspicious activity. In March 2022, the Financial Crimes Enforcement Network, or FinCEN, of the United States Department of Treasury published an alert advising all financial institutions to be vigilant against Russian efforts to evade sanctions and other US-imposed restrictions implemented in connection with the Russian Federation's invasion of Ukraine. The alert provides select red flags to assist in identifying potential sanctions evasion activity and reminds financial institutions of their Bank Secrecy Act reporting obligations, including with respect to convertible virtual currency, CVC. And then, in July 2022, the National Economic Crime Center, NECC, a multi-agency unit within the National Crime Agency, NCA, and Her Majesty's Treasury's Office of Financial Sanctions Implementation, OFSI, also issued a red alert on financial sanctions evasion types used by Russian elites and enablers. The purpose of the NCA alert is to provide information from law enforcement, and the legal and financial services sectors as to some common techniques designated persons or DPs and their UK enablers are suspected to be using to evade financial sanctions. Next slide, please. Before we discuss the alert by FinCEN and by FinCEN, I wanted to briefly give you an overview of which kind of sanctions designated persons might actually try to evade. So these are a couple of measures that the US has imposed since February this year against Russia, which are financial, including the US prohibits correspondent and payable through account and payment processing on certain Russian financial institutions. The US blocks certain Russian financial institutions. Sovereign debt prohibitions applying to new issuances in the secondary market. The US prohibits transactions related to new debt and equity for certain Russian entities. And the US prohibits transactions involving certain Russian government entities, including the Central Bank of the Russian Federation. And of course, the US sanctions numerous Russian elites and their family members, blocking their property and sanctioning other sector-specific entities, such as defense-related firms. Next slide, please. Now let's have a look at a couple of sanctions evasion attempts that the FinCEN alert actually mentions. Here are the common sanctions evasion activities used by designated persons to escape sanctions. First of all, sanctioned persons or entities can misuse corporate vehicles and legal entities, such as shell companies, to obscure the ownership of their companies or properties, the source of funds they receive or send, or the countries involved in transactions, particularly sanctioned jurisdictions. Sanctioned persons and entities may use shell companies to conduct international wire transfers, allowing them to engage in transactions otherwise prohibited and stay anonymous. Shell companies constitute a substantial proportion of the corporate vehicles that we talk about here, that are usually established in some offshore financial centers. Third parties are used to shield the identity of a sanctioned person or politically exposed person, PAP, seeking to hide the origin or ownership of funds, for example, to hide the purchase or sale of real estate. The US recently threatened to punish third parties helping Russia to evade sanctions with secondary sanctions, specifically concerning China. Accounts in jurisdictions or with financial institutions that are experiencing a sudden rise in value being transferred to them without a clear economic or business rationale. Countries previously associated with Russian financial flows that are identified as having a notable recent increase in new company formations. Newly established accounts that attempt to send or receive funds from a sanctioned institution or an institution removed from the Society for Worldwide Interbank Financial Telecommunication, called SWIFT. Some Russian banks excluded from SWIFT include Bank Odkrity, Novicom Bank, from Sviasa Bank, Rossiya Bank, Sovcombank, VEB, and VTB. And last but not least, non-root foreign exchange transactions that may indirectly involve sanctioned Russian financial institutions, including transactions that are inconsistent with activity over the prior 12 months. Let's move on to the next slide. We have our second poll question for you. Does your organization's app or website gather local information, location information, such as IP addresses, geolocation, or others? Let's launch the poll and wait for your results. All right, let's close the poll and see how all of you have answered. 50% of you say that your organization's app or website gathers location information. This is really important if you want to find suspicious activity related to a sanctioned jurisdiction. Tracy, is there anything you would like to add to this result?
Yes, absolutely. Let's go on to the next poll question first, though, because I think it'll be very instructive to kind of talk about both of them at the same time, if that's okay.
Yeah, that's great. Let's move on to the third poll question. The question is, if you answered yes, do you currently use the information as a sanctions control? Let's launch the poll and see your results. Okay, let's close the poll and see what you all have answered. 45% say yes, you actually use this information, but also half of the attendees say no or not sure. Tracy, can you give us a comment on these two poll questions?
Absolutely. So I think what I'd like to do is move on to the next slide and start to share a little bit of information around why we asked these questions. So, recently with obviously the pandemic, I think we all saw the rapid acceleration of digital transactions. And, one of the phenomena that I think we all saw in the industry is criminals easily evading traditional controls that exist from a regulatory perspective by leveraging the anonymity of digital channels. So even in the instance of having something in place like, say, IP blocking with your cybersecurity team, there is readily available technology that criminals are using, such as VPN, proxy, or Tor browser, to simply obscure their true location and then re-enter your site or your app and just go about their business. And making it look like perhaps they are from the location of, let's say, an account they're trying to take over, for instance. And then in the case of things like identity verification and watch list screening, the truth of the matter is that many criminals just don't present in digital channels as themselves. They do leverage the anonymity of the channel and tend to present instead as a stolen, manipulated, synthetic, or perhaps mule identity that they know can pass these checks. And so a couple of really key problems have begun to emerge as a part of this. One is, how can I detect location-based sanctions risk to make sure that I'm actually not facilitating a transaction with someone who's located in a sanctioned jurisdiction? And then the second being, how can I determine whether this entity presenting in a digital channel is in fact the physical identity that they're purporting to be? And so if we move on to the next slide, we'll talk a little bit more about why those two questions we just posed to you are so important for you to be asking yourself right now. We have here at LexisNexis a very vast global digital identity network. It has literally thousands of participants from around the globe. And so we actually monitored the activity on that network as sanctions went into place against Russia. And you can see here we saw a significant jump in attempts to basically evade detection across all of our event types that we see on our network. So that would be things like account opening, login, payments, through several different evasion techniques. One being kind of high velocity attacks and, from those areas. Second being geo-spoofing. So again, same entity kind of trying to change the location that it seems to be transacting from very rapidly in succession. And then third, Tor and VPN usage. So we, this is very clear evidence that these sorts of evasion attempts are the types of things that are being used. And even since, things have settled down a bit, we're continuing to see spikes like the one you see in July, where these methods are being used again. So very, very compelling evidence that this is a very real problem. So next slide for me, please. And then, I think it's important to note that regulators have been leaving us some breadcrumbs around this topic for quite some time. They began recognizing as far back as 2018 that this sort of evasion was a problem in digital channels, and you saw that with FinCEN and the Federal Banking Agency's joint statement back in 2018 around leveraging digital identity, right, in combination with physical identity, and saying like, hey, we need to do some innovation in this space to solve this problem. And then we also saw it with FATF's guidance that they issued on digital identity back in early 2020, which is a great document if you've never read it, written in very plain English. Very much outlines the use cases for digital identity for things like sanctions. Highly recommend you take a look at it. And then as the pandemic came into play, we began to see a rash of enforcements and settlements from an OFAC perspective. You'll see those along the bottom of this slide. All of them really focused on one thing, and that is, are you leveraging the location information that your app or your website is collecting as users, traverse the web or use your app? Are you leveraging that as a sanctions control? And in some way, shape, or form, all of the ones that you see along the bottom have been related to that. Either that was the direct violation, or that was ordered as kind of a mitigating step to be taken after the violation. And so OFAC's been kind of very clear on this as these settlements and enforcements have been dropping, that this is a priority for them. So they're clearly sending the message that that information should be used as a sanctions control. And then, of course, we've even seen hints of it in FinCEN's AML Act of 2020 guidance that they issued, first couple pieces of it on arts and antiquities. They're actually requiring the inclusion of this type of location information in SAR filings. It reared its head again in OFAC's ransomware payments guidance, as well as their virtual currency guidance. It's a topic that was broached by the FDIC and FinCEN tech sprint on proving identity in digital channels. And then, of course, it's very specifically mentioned in the FinCEN alert on Russian sanctions evasion, which I believe if we go to the next slide, we're going to cover off with you in detail. But felt it was very important for everyone to really be aware of this, that you do need to be aware of what location information is being collected, perhaps by your fraud team, your InfoSec team, cybersecurity team, and definitely be leveraging that as a control in your sanctions program.
Thanks for these really insightful graphs, Tracy, that you created from LexisNexis data, and also the timeline, which quite nicely visualizes how much guidance documents and enforcement actions we have seen in the past few years on this topic. So while large-scale sanctions evasion using virtual currency by a government such as the Russian Federation is not necessarily practicable, sanctioned persons, illicit actors, and their related networks or facilitators may attempt using convertible virtual currency, or CVC, and anonymizing tools to evade US sanctions and protect their assets around the globe, including in the United States. And the FinCEN alert lists 7 red flags related to sanctions evasion using convertible virtual currency. Some of these examples include transactions initiated or sent from non-trusted sources, locations in Russia, Belarus, or suspicious IP addresses, transactions connected to CVC addresses listed on OFAC's specially designated nationals and blocked persons list, the usage of a CVC exchanger or foreign located money services business, MSB, receiving virtual currency from an external wallet and immediately initiating multiple rapid trades among multiple virtual currencies with no apparent related purpose. This may indicate attempts to break the chain of custody on the respective blockchains and further obfuscate the transaction. Initiating a transfer of funds involving a CVC mixing service, more about that in a little bit, and receiving a transaction identified by blockchain tracing software as related to ransomware. The importance of convertible virtual currencies as a sanctions evasion tool is highlighted by the recent increase in crypto-related OFAC designations, which I've put in this red box on the right side. In February 2021, OFAC entered into a $507,000 settlement agreement with BitPay for apparent sanctions violations related to digital currency transactions. In September 2021, OFAC designated SUEX, a virtual currency exchange created or based in the Czech Republic, for facilitating ransom payments pursuant to ransomware cyber attacks. In March this year, OFAC sanctioned virtual currency mixer Blender.io, which is used by North Korea to support its malicious cyber activities and money laundering of stolen virtual currency. In April, OFAC designated Estonia-based virtual currency exchange Garantex for operating or having operated in the financial services sector of the Russian economy. And last but not least, in August this year, OFAC sanctioned virtual currency mixer Tornado Cash, which has been used to launder more than 7 billion worth of virtual currency since its creation in 2009. Let's move on to the next slide. Tracy, can you tell us more about the guidance on virtual currency?
Absolutely. So again, this is another place where I think, this is a great document to dig into. It's very, very well written. But this is another place where, again, you're seeing kind of geolocation tools really being highlighted. Particularly, not only the basic tools of, IP blocking, that sort of thing, but getting a little more sophisticated about it. And we will talk in detail about that a little bit further on in the presentation in terms of what sorts of possibilities exist around that. But, as you're sort of, planning on how to kind of transform your practice, right, around some of this new guidance, this was very important, I think, in terms of one to highlight, if you've got virtual currency risk in your portfolio, and let's face it, all banks do, whether that's related to, currency being transferred out to an exchange or currency being transferred back in. There are a number of tools that we're going to take a deeper look at a little bit further in the presentation to give you some ideas of the sorts of technologies that you might want to begin looking at to be able to satisfy this guidance on going forward.
Thanks, Tracy. Let's go to our fourth poll question. How often do you have suspicious transactions which you analyze in detail? Daily, weekly, monthly, yearly, or you're not sure? Let's launch the poll. Okay, let's close the poll and see the results. 80% of today's audience experience suspicious transactions daily, weekly, and monthly. That's a very high number. Tracy, what do you think about this result?
I think it's probably very typical, especially in the current environment. I'm definitely hearing from a lot of our clients that they're uncovering a lot of suspicious activity that does require that level of investigation.
Thank you. Okay, let's move on to the next slide. Let's have a look at what the UK published recently on the same topic. And before we look at the red alert and the red flag indicators by the UK, I wanted to briefly sum up the measures that the UK has implemented against Russia, which are very similar to OFAC's financial sanctions against Russia. So under the Russia Sanctions EU Exit Regulations 2019, there are 5 financial offenses that can be summarized as penalizing dealing with frozen assets of a DP and penalizing making funds or economic resources available for that DP, either directly or indirectly. In addition, the regulations provide that circumvention offense of intentionally participating in activities knowing the object or effect is to circumvent the breach of regulations or to facilitate their contravention. Next slide, please. The alert issued by the NCA and OFSI focuses on the sanctions evasion attempts by Russian elites and their enablers. Designated persons or DPs are using a range of techniques in order to evade sanctions impacting on their personal and commercial holdings. DPs are using associates, including family members and close contacts via enablers, to transfer assets such as shareholdings in holding companies to trusted proxies such as relatives or employees, selling or transferring assets at a loss in order to realize their value before sanctions take effect, transferring assets such as shareholdings in, divest investments to ensure ownership stakes are below the 50% threshold, or relinquishing previous controlling stakes, and enablers. I found it interesting that the UK actually focuses on designated persons and their enablers. Enablers are individuals or businesses facilitating sanctions evasion and associated money laundering for designated persons. Let's move on to the next slide. A lot of red flag indicators that the FinCEN alert and FinCEN alert has, and also the NCAA alert, have a lot of indicators in common. But some of them we picked up, some of them which we believe were the most important or most noteworthy. Let's have a look at the most common sanctions evasion methods used by designated persons or entities. Designated persons will seek to transfer assets and funds directly and indirectly to jurisdictions where sanctions are not in place, such as the United Arab Emirates, Turkey, China, Brazil, India, and the former Soviet Union, excluding the Baltic states and Ukraine. Doing so on the behalf of a designated person will involve the use of multiple laundering methods, including use of secrecy jurisdictions or citing Russian legal protection from sharing information. To move funds, it is likely that designated persons will explore alternative payment methods, including the use of crypto assets, to move funds to circumvent sanctions and mitigate reduced access to the SWIFT payment system. Russian money launderers have increasingly been observed in the UK intelligence and operational activity, providing cash to crypto asset services with the ability to move significant volumes of funds. The main barriers in upscaling crypto asset use are liquidity and market size, while the transparent nature of the blockchain could reduce its appeal to circumvent sanctions. Given the unprecedented range of sanctions imposed against Russia and the increase in activity-based sanctions targeting key industries, it is likely that certain nation states that continue to support Russia may seek to purchase discounted oil and gas, as well as supply Russia with military hardware and other controlled goods or services. This may present opportunities for designated entities and their enablers to circumvent asset freezes. Next slide, please. The NCA alert lists 34 red flags indicators suspected of being used to evade sanctions and groups them under 3 main categories: indicators for the deletion of frozen asset transfers, indicators for the detection of frozen asset transfers, indicators for the detection of enablers, and indicators for the detection of suspicious payments. A few examples of indicators for the detection of frozen asset transfers include changing ownership to non-Russian family members or reducing ownership to below 50%, using complex corporate structures and offshore companies, and the movement of assets prior to a designation. A few examples of indicators for the detection of enablers include trust and company service providers offering nominees and trustee services to designated persons, pooled accounts, sale of high-value assets, suspicious consulting invoices at exorbitant or clearly non-market rates. And a few example indicators for the detection of suspicious payments include payments to or from offshore jurisdictions, payments using fintechs, including payment service providers and electronic money institutes, and private equity venture capital vehicles connected to the Russian industry. Next slide, please. And I believe Tracy will now give us some lessons to take away from the red alerts that we have seen.
Absolutely. So Alex and I thought it would be good to try to sort of distill this down in terms of just major lessons that may be very different from some of the guidance that we've seen in the past that we should all perhaps keep in mind as we think about how to transform our practices. So first, and I'll go through these at a high level and we'll dive into each one a bit deeper. Birds of a feather flock together. So I came up with that title just to say, we need to take a deeper look when it comes to Russian sanctions evasion into relatives, associates, potential enablers, even VC and private equity structures, for instance, that they may be using to obfuscate the true source of funds. And then second, history matters. So point in time risk assessment may not be enough when it comes to number one. We may need to dig a bit deeper and take a look at what was happening with these structures or these entities just prior to the sanctions that were put into place. So what did they look like then? And then did we see any activity just prior to or just after sanctions? So a flurry of changes, let's say, in entity structure, a name change, an address change, etc. Perhaps transfer of ownership, right, to a relative or associate, that sort of thing. Number three, location, location, location. So we've talked about that a little bit, but leverage it as a sanctions control. Make sure that you're also, really taking into account high-risk jurisdictions very carefully. So, jurisdictions that may be sympathetic, for example, with a sanctioned jurisdiction or country. And then consider consortia, which we'll talk about in a bit. And let's consider perhaps how working together with others across the ecosystem can help you have a bit more insight. And then fourth, transform your approach for virtual currency risk. Really begin asking yourself, do you have all the tools and the data that you need to truly assess and investigate the risk associated with a given wallet or exchange? And we'll, as I said, we'll dive into each of these one at a time if you want to move to the next slide for us here. Okay. So birds of a feather flock together. Let's talk a bit about types of solutions to consider for each of these. So this one again is about taking that deeper look into relatives, associates, potential enablers, corporate structures, etc. Number one, relatives and associate data. Fairly widely available on the market. This is a very valuable tool to help you in kind of in sort of doing a bit of the entity network analysis, right, around these types of entities. So, being able to, to understand that perhaps you're seeing, transfers of funds between relatives and associates, for instance, very valuable insight at this point in time, given some of the guidance issued. Obviously, business risk data, very important, considering where you may have gaps there to meet some of these new requirements is another place to kind of lift the covers on a bit and see if perhaps you can find some supplementary sources. Beneficial ownership data is just becoming incredibly more important every day. We're seeing, more emphasis put on that really across every major regulatory regime right now. Due diligence attributes is something else. So several other data providers, or several data providers have sets of due diligence attributes that you can use to risk rate your portfolio in a bit more real time. So these are collections of things like criminal records, right? Asset ownership data, certifications, professional licenses, things like that. And that data may help you identify potential enablers, people with a criminal background that might be associates, for example, of your customer that they may be transacting with, and things like that. So very, very great tool to kind of up-level your ability to risk rate to a little bit more real-time status to help facilitate some of the more instant transactions that you're dealing with. Criminal records, as we mentioned before, sometimes is part of those due diligence attributes, and then oftentimes they can be purchased separately as well. But again, very useful tool that you can kind of put into, if you've got a platform you work with, various rule sets to help you determine what your risk might be in a bit more real-time way. And then entity linking analysis and tools. It's a very crude version of one there to the right. But there are a lot of platforms now that have this type of entity linking visualization. And it can help you understand that, like, okay, this customer that's trying to transact has been transacting a whole lot with these other couple of entities. And oh, by the way, they're potentially an enabler, right? Or they're potentially a relative or associate, even if they may have a different name, right? So super, super interesting stuff. Definitely a few places you can delve into and kind of, fortify your resources on that. So next slide. Now let's talk about history matters. And this is this whole thing of, not just looking at today, what does your risk look like today, but understanding that the picture may have changed a lot during this very critical period, just before sanctions or after sanctions went into place. A lot of the same data sources are very useful for this, but I just wanted to reinforce, don't stop at looking at what things look like today, what the picture is today. Make sure that if you're picking up on any risk at all, right, you're digging back a little bit further and you're saying, hey, did this entity have a name change, right, around that time? Did they transfer ownership? Did they move to a sympathetic kind of high-risk jurisdiction, right, outside of Russia during that time period? So ensuring those solutions that you use do provide that history that you might need to determine that risk is very critical. Next slide for us. All right, location. A couple things to say about that. Obviously with threat vectors kind of converging on digital, one of the biggest things that's important in terms of complying with this notion that we're seeing from regulators now around using it as a sanctions control is to collaborate well with your fraud and your InfoSec or cybersecurity teams. It's very critical that you understand what location data is being collected today from your app or from your website, right? In terms of geolocation or IP address, etc. And it's important to ensure that any of that location data is actually being used as a sanctions control. Another thing that's important to think about a bit is that if you kind of fail to collaborate in that way, it's quite possible that that will create compliance risk for you, as evidenced by that flurry of activity. So, like for me, one of my #1 action items that I tell all my clients to consider today is go back and have that conversation with your fraud team, your e-commerce team, your InfoSec team, understand exactly what location data you have been collecting in-house, and just make sure that you are in fact leveraging it as a control in your program so that you're not kind of wide open to an enforcement at this juncture. Next slide. And then another point on location is, IP blocking and stuff like that, as we mentioned, is just not enough. You really need some advanced location intelligence to help you with this problem of a potential criminal kind of showing up in your channel, disguising or obfuscating their true location. And you need that to make sure that you don't violate, the de facto, jurisdictional sanctions that exist, that you're not facilitating a transaction, to or from, a comprehensively sanctioned jurisdiction, and even in the case of some of those enforcements, it's just been login. Even facilitating login has been tagged as a problem from one of those comprehensively sanctioned jurisdictions. So one thing that you could think about, there are digital identity and location intelligence consortia out there in the marketplace. And they're typically built with a privacy by design sort of architecture. So you don't really need to worry about that in terms of making your privacy team happy and your data security team happy, because you don't necessarily have to know exactly who someone is, to take a look at this sort of information. So many of these consortia do have, very strong global penetration across a lot of different industry segments. And what that allows you to do is unmask and kind of outsmart these potential evaders at their own game, because the fact is that evaders are very careful about covering their tracks and obfuscating their location when they're in the midst of something nefarious where they know they need to be hiding it. But if you're a member of one of these consortiums, it could be that 5 minutes ago, when they were playing Words with Friends on their mobile device, they weren't careful at all, or when they logged on to check an email. And so it could be that another member of the consortium actually saw them operating from a sanctioned jurisdiction just 5 minutes ago. And so that allows you, when you have someone present in a digital channel that may be using a VPN or a Tor or a proxy, and so you don't have clear view to their location, to actually consult the network and say, hey, have you seen this digital entity operating from a sanctioned area sometime in the past few minutes, hour, day, however you want to set your policy, so that you can make better decisions about what to do about those transactions when you don't have a clear view of their current location when they come to your site. So next slide for me, please. And then my last point on location is really about high-risk jurisdictional data. If you don't subscribe to this today, look, there are a lot of open source sources for this. However, in the world of predominantly digital transactions where customers have a customer experience expectation of instant, everything's instant, right? If you subscribe to some of the providers that actually aggregate all these lists, you can then work that into real-time workflows that allow you to assess a transaction against, various categories. For example, things like, FATF gray list areas, for, weak KYC, or, high risk areas for money laundering in general, or perhaps human trafficking, right? It allows you to then in real time evaluate that risk and perhaps know exactly how to triage an alert, even say in your manual review queue, if it's not something that you can resolve through automation in real time. So next slide for me, please. And then last but not least, this whole idea of transforming your approach for virtual currency risk is very, very important. Because as I said, any financial institution who has a customer who might be transferring funds out to a virtual currency provider or back into one of your accounts does have this crypto risk, right, in its portfolio. So a couple places to look at and investigate. First would be there are providers out there that offer solutions around crypto wallet or crypto exchange risk assessment. These would be the likes of, and I'll name some names you may have heard of, Chainalysis, CipherTrace, Elliptic, etc. You can go to them, and they not only kind of mine the blockchain, but they also go out and actually open accounts and stress test the KYC procedures of all of these exchanges, and that can very much help you understand what sort of risk you're dealing with. Because the fact of the matter is, in the crypto world today, there are those providers that have kind of stepped up and said, look, we want to be white hat, we want to be legitimate, we want crypto to be seen as a very legitimate means of currency. And there are others located in certain parts of the world that absolutely know that they are underwriting criminal behavior and are refusing to put some of those processes in place. So that sort of data, that sort of solution can help you better determine when you perhaps might be seeing transaction activity to or from one of your accounts from one of those higher risk exchanges or wallets, or whether perhaps you may be transacting with a wallet that has been named, let's say, as part of a ransomware payoff at some point, in the past. So very, very interesting tool set. If you've never looked at it, definitely worth a peek. And then in addition to that, obviously then, when you do surface risk, you need a way to investigate it. So many of these same providers, and then there are also kind of some specialty providers that offer crypto tracing and investigation tools. These are really slick. I think the biggest myth about crypto is that it's completely anonymous, right? And it's really not, especially as some of the legislation and regulation has come into place that has required, these cryptocurrency exchanges to begin to perform KYC to the degree that they should. Again, they're not all complying, right? But it has been required, and those who want to play on the up and up are doing it and doing a good job of it. So as a result, these crypto tracing investigation tools are seriously important tools for getting to the bottom of a crypto-related investigation. And they can even help sort some things out, for example, when mixing services and things like that come into play that are being used to try to help further obfuscate or create some layering in between transactions that might help you lose visibility to that normally. We talked already about that high-risk jurisdiction data, but that comes into play here for cryptocurrency as well. Very important to understand whether that exchange kind of sits in one of those high-risk jurisdictions, or that wallet belongs to somebody who's in one. And so that's another place that data is very useful. And then, of course, the location data as well. We talked about how we can use that to kind of lift the veil when someone may be trying to obfuscate the location, and that comes into play here in this virtual currency area as well. So I think the bottom line on this is, crypto is new, and but it's blossoming. It's reaching scale. It's in a bit of a downturn right now, But I think that, it's here to stay, because you do have some very large legitimate providers, and you've seen, really strong adoption of it by younger generations. So I think we really do have to figure out, what is our new transformational approach when it comes to dealing with this sort of risk.
Great, thank you, Tracy. This concludes our slides, and we can move on to the Q&A. I've seen a lot of questions already coming in throughout the webinar, and we can maybe take them from the newest to the ones we've received before. So the last couple of questions we received, I don't know, Tracy, if you also see the questions pot, but I can read them out loud for everyone.
That would be great, because I don't think I do.
Okay, one question from Howard. Howard, thank you for your question. Is, in your view, is logging in from a sanctioned country in itself a violation? If the login was used to view information only, is this possibly covered by sanctions?
It really depends, I think, a lot on the industry. And there are certain industries that and use cases that are protected, permissible use cases. So think about things like, I'm accessing a medical journal, right? That's not necessarily problematic. However, it's probably not okay to be kind of, on the beach, on vacation, let's say in Cuba, and execute a trade, right? And log on to execute a trade. So in the case of the one enforcement that I mentioned, the issue was a logon that would allow access to a software product. So that's where you get into some danger. And then again, somebody may be logging on just to look at, say, an account balance, what have you. But if you have any features active in that website or app that then allows them to add features, right, or purchase a new product, that's where you got to start to really think about that there is some risk there.
Yeah, I'm looking into the sanctions that are imposed against Russia by the US and the UK, and you have to look at the regulations. What are the prohibited activities, and anything related to these activities might be sanctionable. So logging in to to see products or to see services, or logging in, like Russian oligarchs are still logging into Facebook and have Twitter accounts and do other stuff, but it's not necessarily a prohibited activity as long as it's not prohibited by sanctions regulations. That's or right. Export regulations. Then another question by David: is there a friction between location and identity data collection and privacy rules, such as the GDPR, for example, in Europe? They're not as, like, GDPR obviously is for the European Union, but the US has privacy laws as well, and the UK obviously too. Can there be friction between what kind of data you can collect and use it for sanctions controls, and yes, also keeping data private for your customers?
Absolutely. I think when you're looking at something like I was talking about, like Digital Identity Consortium, for instance, I think it's important to note that those that are most successful today have a very privacy by design approach. In other words, all data that's contributed is hashed and tokenized. There is no PII revealed to other members of the consortia. So that's one element to consider. But another is this. So even in GDPR, there is a carve out for these types of use cases in terms of, fraud, security, right, financial crime, and there is a carve out to allow for a little more of that. Now, sometimes, depending on the country, there's also a requirement that when technology like this that collects location is part of your app or your website, that's revealed to the customer, right? And that they explicitly opt into it up front. So, it's definitely a factor to consider, but I've yet personally, and I used to do a lot of work specifically in this space around location data, opt-in, and that sort of thing. I've yet to see a country where it's not possible to do it for this use case with the right consents or privacy policy or terms and conditions associated with your app and website.
Okay, thanks. I will also try to answer two questions in one answer, because we have two questions. One from David: is China emerging as an active intermediary on behalf of Russia and Russian citizens? And another question by Abdul Kadir, to explain the difference between secondary sanctions and secondary sanctions risk. I think I mentioned secondary sanctions because I saw an article, I think it was published this week or last week, that the US is warning third countries and jurisdictions which it doesn't have an influence on with its sanctions regulations, not to support Russian sanctions evasion attempts. Obviously, you know, some people might argue that Russia is looking for countries that do not impose sanctions against it to you know, open up new markets and shift assets or buy property or real estate elsewhere. So first of all, secondary sanctions is part of the OFAC regulations. There are a couple of sanctions programs that specifically mention measures that can be imposed against foreign-based persons or entities for dealing in transactions or facilitating transactions with sanctioned persons. But these secondary sanctions, they are in the Iran sanctions regulations, I believe, North Korea and Syria, and also the global Magnitsky sanctions, which target Russians responsible for human rights violations. So you have to look into the sanctions regulations if you really want to, you know, understand that the US can target foreign persons and entities and punish them for dealing with certain persons in these countries. And secondary sanctions risk, I guess that's associated with these countries, like I said, especially Iran, North Korea, Syria, and partially Russia. Of course, the Western allies, they want to maintain the highest pressure on Russia and its elites, and there will be countries that you know, there are countries that are not imposing sanctions against Russia, but you should definitely be wary of doing business with these countries. I don't want to mention any specific countries because that really depends on the situation. But yeah, be vigilant about third countries that are suddenly having more transactions with you than they previously had. You know, that's a red flag that has been mentioned in the alerts as well. And then another question by Lewis: with current technology, is it easy to disguise the location? And yeah, how would you deal with that in practical terms?
I'm sorry, what was the first part of the question? You broke up.
With the current technology, is it really easy to hide an IP address?
Totally, yes. So essentially, virtual private networks, that's a VPN, or proxy browser, or the Onion router, I don't know if you've ever heard of that browser, can all be used in order to obfuscate location. And actually, even, let's say in the case of, you know, let's say a sanctions evader has a mule identity, right, associated with another country that they want to use. Maybe it's a Polish identity, right? They can easily use one of these to make it look like their location of their digital entity is actually there in Poland versus Russia. And they can be sitting in Russia when they do it. So that's why I'm bringing up the fact that advanced location intelligence is so very important, and even considering you know, things like consortia, so that you have visibility outside of just what you're seeing when they come into you. Because, you know, it's almost impossible for any entity to kind of live its whole day-to-day life across the web and mobile today with their guard up the whole time. And it's interesting if you read a lot of recent kind of indictments, right, or, you know, case reviews around things like evasion and financial crime, you'll see a lot of interesting stories where it's things like that that now are leading to the capture or the indictment of some of these criminals. You know, they let their guard down for a minute while they order food, you know, through a you know, another app, and that's when law enforcement figures out where they really are. And so it's very, very interesting. And it didn't used to be technology that was readily available, but it is extremely readily available. And that's because it has a very legitimate use case as well around protection of privacy. And not everyone that uses a VPN or a proxy or a Tor browser is a bad person, right? Some of them are very legitimate customers with privacy concerns. And so that's the problem as I see it, is how do you put the technology in place that lets you perhaps distinguish between those two, you know, and understand whether this is a person who's just always on a you know, a VPN, but they've been seen, you know, in different places, or is this a person who, you know, just now turned on that VPN to obfuscate their location? So it's a really interesting problem to try to solve for sure.
Thank you. I'll pick up another question, which is regulation related. Does engaging with a non-sanctioned Russian entity about what business they can conduct under US sanctions violate the management consulting services activities prohibition under OFAC? That's a really interesting question.
I don't know if I completely understand it. See if you can restate it for me.
In the latest round of sanctions, the UK, the EU, and the US prohibited certain consulting services like
Yes.
accounting services So that's the question: is it to Russia in its entirety, or is it to Russian individuals that have been designated, or Russian entities that have been designated? This is something I have to look into, but that's a really good question. So basically, it's just a matter of checking the paragraph of this specific OFAC regulation in the Code of Federal Regulations, or whether the target is the whole of Russia, or to any person or entity in Russia, or only the targeted Russians and entities. Right. I would have to look into this, but thank you for that question. And also to answer two questions by attendees about the certificate for this webinar, whether it will be sent to non-ACSS members. Please, that's a really good question. Please send an email to helpdesk@sanctionsassociation.org, and my colleagues will be able to answer that to you, whether you will receive the certificate as well, even if you're not an ACSS member yet. Another question just came in from David. Can you outline the industry consortia in place that facilitates government compliance? This is all very daunting for the average small and medium business financial institution. So industry consortia that facilitates government compliance. Do you have any tips, Tracy, for small and medium-sized businesses?
Absolutely, yeah. Yeah, absolutely. There actually, you know, for example, you know, we have one of these networks. There are many of them. You should check them all out. Even within our consortium, right, where we have thousands of global participants, many of our participants are small and mid-sized banks, credit unions, that sort of thing. So, you know, the technology is often very affordable and scalable, right? Whether you're a small or a large organization.
Okay, thanks. Thank you very much to everyone for all your questions. I hope this webinar was helpful to you and interesting to you. I would like to move on to the last slides of this presentation. Let's move on to the next one. Some information about the next ACSS webinars. In exactly 1 month, on the 29th of September, we have a webinar on the Uyghur Forced Labor Prevention Act. So if you are a US importer of products from China or from Chinese origin, please join us in this webinar, because there are major implications for US importers since this act came into force in June. And our speaker will look back at the past 2 and 3 months, and we will analyze how US importers have dealt with this, these requirements so far. And then on the 6th of October, FTI sponsored webinar on US export controls for financial institutions, also based on a recent FinCEN and BAS alert, asking financial institutions to be more vigilant about Russia's sanctions evasion attempts in acquiring US technology. So join us for this webinar. This one of the speakers is Eric Rudolph from FTI. You're welcome to register the webinar. The 6th of October webinar will be available online probably next week, and the one on September 29th is already online and free for registration. Next slide, please. Thank you very much for joining us today. Thank you very much, Tracy, for these wonderful graphs and insights and the lessons from the red flag alerts that we have seen. I hope everyone enjoyed this webinar. We have a record-breaking attendance today of over 300 attendees. Thank you very much for joining, and hopefully, see you becoming ACSS members. Please feel free to contact me or our help desk if you have any other questions. And please take 30 seconds of your time to submit a survey about how you like this webinar, so we can improve it for next time. Thank you.
Thank you so much.
Thank you.
Have a great day, everyone. Goodbye.